Welcome to Morning Market Report. I'm Digvijay. Today is 10th of March and as of 8:26 a.m., GIFT Nifty is indicating a 47-point gap down opening. This is the chart of Nifty 50. This is 5-minute chart and what I can see is that Nifty 50 is currently trading in a channel. So let me quickly draw it. This is the one leg of the channel and this is another one. So market closed exactly at the lower trend line of the channel. So I was expecting market to open a little bit gap up. However, it's now is GIFT Nifty is showing is going to be a 50-point gap down. At 6:30 a.m. when I saw GIFT Nifty, it was indicating a 15-point gap down. So it was basically at the same level or a little bit of gap down. However, now the market is going to open quite a bit lower than what it was showing at the early morning. So let's see where market open. Market will open most probably somewhere here, and from here there's a possibility that it will take resistance from here and then again continue to fall, or it may again come inside this channel. And if that happens, then towards the towards 12:30 we can expect a big move either on upside or on downside after this channel is broken, and there would be a confirmation for that. Even if you just look at the open interest, you can see that the green bars are more prominent and bigger than the red bars, and green bars represent put. So it clearly shows that the market are the players, the big players with big money, they are not really expecting market to fall. Like it is the expiry of 13th March, so they are not expecting market to fall. However, there are many times where it has been seen that the open interest doesn't work. So just on the basis of open interest, we can see a lot of support level like 20 to 500, 20 to 400, 300, similarly 200. However, there is not much resistance, so market is more prone to move up from here than to come down. So that's about the open interest. And in terms of the FII DII data, if I show you for the 7th March, yeah, so 7th March, FII net sold for 2000 crores approximately, and DII bought for 2300 crores. So FII did sold, and the trend actually continues, which I just told in the last video, I believe, is for 11,000, then 4,000, 3,400, 2,800, 2,300, and now 2000. So you can see that the net sold by FII has been decreasing day by day from 11,000 to 2,000, and every day has been decreasing. And one more trend which is there, not on every day, however this can be seen as a very good sign, is that how much FII net sold, DII net bought more than what FII net sold. So this is a bullish sign, and that was happened on 7th of March. Not quite happened on 6th March, but the similar thing can be seen on 5th March, on 4th March, 3rd March, 28th March, and many more days. So that's one good sign. And let's see if market will open somewhere around here, and then if it shoots up, then there is a possibility that it will again come down, or it might go inside this channel and then trade in a sideways market. So as of now, I'm not really expecting any big moves today. There might be a consolidation, but we have to see what actually happens. And one more interesting point which I just read is that the Sensex PE is cheaper than the Dow Jones Industrial Average PE. So Sensex PE, basically Indian market PE trade at a premium, and the reason being the earning growth. Indian market as is a developing economy, so the earning growth potential of companies is much more higher than those companies who are operating on a developed market like the US market. However, now the things have changed, and S&P S&P Sensex PE is now lower than the Dow Jones Industrial Average, and this is quite a shock. And the reason that this happened is because the earning growth of the Dow Jones Industrial Average company was higher than what it was for S&P Sensex PE. So that's one of the reason why this happened. And we can also see that the accumulation of the stocks is already started to happen as the the price of the blue chip stock, the big stock, is already quite low, like it fall by 30 to 40% within this range, and this is a very good place to accumulate the stocks. So if you look at the USD INR, because this is very important, this is what shows how much the foreign institutional investor is going to make net. Because let's say they make 10% in the Indian market, now they have to convert that rupee into dollar, and while converting, if the rupee has depreciated, that means they now have to give more rupee to get the same number of dollars. So this is bad. It just diminishes their return. Let's say they make 10% in Indian stock market, buying some particular stock, let's say HDFC Bank. Now when they convert that, then it would not be 10%, it would be somewhere around 6% or 7%, because rupee has depreciated significantly. And that's what happening. It just, it is bad because it helps foreign institutional investor to lose trust on a country's central bank. So that's a bad sign, and that's one of the reason why FII are selling so much. So first, rupee need to get stable. However, what trend I'm seeing right now is that it was a very sharp up move and then it's consolidation. So there is a very high probability that it will even break the last high, or come very close to the last high, which was approximately 88 88 rupees $1. So let's see, it's 8:33 a.m. let market open, and most probably is going to bring gap down.